Good for you. You own life insurance coverage. Now, though, you may be rethinking your decision, or things may have changed and you're unsure about continuing premium payments. Before you decide what to do, remember that keeping your United Home Life or United Farm Family life insurance policy in force may well be one of the best decisions you'll ever make. According to the Life Insurance Market Research Association, 49% of Americans have no life insurance at all. None. And when the unexpected happens, their loved ones will not have the funds provided by a life insurance policy's death benefit to help meet financial responsibilities. Life insurance is not a short-term expense. It's long-term protection to ensure the future of your family. Generally, the younger you are, the less expensive life insurance will be, and healthy lifestyles can help lower premiums even more. The death benefit of a life insurance policy will allow your loved ones to carry on financially at a very difficult and emotional time, and will also help take care of the financial responsibilities you leave behind. There are also benefits for the living. Other individuals can be insured on your policy using benefits and riders. And, depending on the policy, there may also be no-cost built-in riders such as a terminal illness benefit, which gives you access to your death benefit now in the event of a terminal illness where your life expectancy is 12 months or less. Your policy may also have built-in options for you, the policy owner, that can help you keep this invaluable protection in force with lower or even no further premiums due. Before you make a final decision about your current life insurance policy, there are several things for you to consider which can have a financial impact today and in the future. Whatever your current premium payment, it will most likely always be lower than any future policy you buy, simply because you were younger at the time of purchase. Your health may have undergone an adverse change, and if it has, securing life insurance coverage now may be more difficult for you, more expensive, or may even be unavailable altogether, depending on the severity of any changes in your medical history. Currently, your policy may be building up cash value. If you surrender your policy for cash, you'll receive the funds, but any future life insurance purchase will start the cash value buildup process at zero. Life insurance policies have built-in incontestable periods, typically 2 years in length. Once that time frame is over, an insurance company cannot contest payment of policy proceeds. If you surrender your current coverage and purchase another policy, that incontestable period starts over. And perhaps most importantly, by continuing your coverage, your beneficiary will receive a benefit as you intended when you originally purchased your policy. If you discontinue paying premiums as they come due, your policy will ultimately lapse. Should that happen, it may be possible, depending on the type of policy, to request a reinstatement, but the requirements can vary. You'll need to provide evidence that you're still insurable, that your health hasn't changed for the worse. This could include medical exams, bodily fluids testing, a statement from your doctor, and other requirements. If a reinstatement is granted, all past due premiums must be paid, including interest. If the policy had a loan, that loan will have to be repaid too, plus any loan interest. When a policy is surrendered, your coverage is gone. There will be no benefit for your beneficiary, and, most likely, the financial responsibilities for which you purchase life insurance coverage will still exist. But the beauty of life insurance is that you may still be able to keep at least some of the coverage provided by your existing policy. As a policy owner, you have several options which will allow you to still maintain life insurance coverage. You can reduce the face amount of your current plan to reduce premiums, which may make it more affordable. While the benefit may be lower, you still have vital coverage in place without having to start over in another policy. Take an emergency loan from the policy to make a premium payment or two. The loan balance plus interest will reduce the death benefit, but again, your existing policy stays in force and a benefit will still be paid to your beneficiary. Your policy may have a built-in extended term insurance option, or ETI. If you choose to exercise the ETI option, the surrender value in your existing policy is used as a one-time premium to purchase paid-up term insurance for as long a term as possible. You'll still have the same amount of coverage with no premiums due, but since it's term insurance, there will no longer be any cash value, and at the end of the term period, the coverage terminates. Your policy may also have a built-in option called Reduced Paid-Up Life Insurance, or RPU. If you choose this option, the surrender value of your policy will be used to purchase a reduced face amount that is paid up, with no further premiums due, and that will continue in force for the life of the policy. In this way, at least a portion of the death benefit is still in force, but with no further premiums due. Your beneficiary will receive the reduced benefit, which can still be used to help with financial responsibilities. Of course, if you feel that surrendering your existing policy is the best decision for you and your loved ones, just remember that purchasing coverage in the future will cost more because you are older, and it may cost even more if your health is deteriorated. You'll also be faced with meeting new policy requirements, a new incontestability period, and a cash value build-up process that starts over at zero. Thanks for your time. Give your agent a call today about the options in your policy from United Home Life and United Farm Family Life that will help you keep your life insurance coverage in place so that those you value are protected.